Welcome to the Northwest Quadrant Wealth Management E-News. Thanks for joining us. So listen, we are really enjoying this market melt up in stocks as much as the rest of you. We really enjoy when stocks trade higher. Obviously, account balances become very robust and earnings are good and all of that stuff. So we like it just as much as you do because we have money in the same investments that all of you do. And so our stuff is looking quite rosy these days. But I thought I'd take this opportunity as a chance to remind you that stocks do not go up forever. Most of you know that, but I wanted to put that out there and remind you. It doesn't mean we are going to do anything dramatic about what we're saying right now, that you all should mentally prepare yourself for a stock market correction. When it happens, what causes it is anybody's guess. I think the market is sort of very used to a lot of the noise that's coming out of the White House related to the Fed chair or tariffs or all that stuff. The market has sort of gotten used to now absorbing that. It will be something that none of us can imagine that will create the market turmoil and a sell-off. But we're not going to do anything about it. Remember, it is not a binary decision, all in or all out, where we're going to take a bunch of risk off the table. All of those decisions are driven at your individual level by your personal circumstances, not what the market is doing. So I just want to remind you that stocks do not go up forever. We are due for a correction, quite overdue for a correction. We are going to get some sort of correction in 2026. What causes it, when it is, nobody knows, us included, and so we're not going to do anything about it. But just mentally prepare for stocks at some point rolling over and going down for some period of time. And then you can say to yourself, oh, Tyler and Josh told me that this was going to happen and it's happening. I'm not going to do anything crazy about it. The good news is our portfolios are in a really good place. Today's a good example of asset allocation doing its job, and Josh can talk some more about that.
Well, we're in the midst of earnings season, and one of the things that we constantly reiterate in these videos is everything in markets is relative to expectation. And last night, Microsoft reported and the stock itself was priced for perfection. It's down 10%, one of its worst days actually ever. So it's a great example of things not going, when stocks are priced for perfection and they don't report perfect earnings, everything is relative to expectation, and subsequently the stock is getting absolutely hammered.
Because earnings weren't bad at Microsoft.
They definitely weren't. They're making billions and billions of dollars every quarter, but the expectations were just that high. But sort of the silver lining amidst all of this on a day today where we're seeing maybe a little mini correction in some of the big tech names is the dramatic outperformance of both international developed stocks and small caps. And that's led to really positive results in our portfolio, particularly over the last month. Gold continuing on a tear, but when you look at small caps and international, they are really providing that diversification factor and proving that ultimately over the long term, asset allocation absolutely works. So we're really heartened to see it. We hope it continues. We, of course, don't want to get too optimistic because there's been a lot of false starts, particularly over the last year, but this is some of the best outperformance we've seen in over a decade.
Yeah, so moral of the story is markets are going to correct at some point in 2026. It shouldn't cause you to make any big decision. Asset allocation, though, is really working really well, and the best it's worked in decades. So we're encouraged by that. As always, if you have questions about your situation or your accounts, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.